All right, hey, what's going on? This is Dan Keller, your mortgage advisor at Guild Mortgage. I want to welcome you to another episode of Making Sense of the Markets. Today is Saturday, November 4th, episode number 45. 45 weeks in a row, I've come to you with a market update and some valuable information that you can either use or that you can share. And this week's message is super relevant. So there's no doubt whether you've logged into social media over the last 48 hours or watched the news, you've seen some type of information surrounding President Trump's proposed tax plan as it relates to mortgage interest deductions and capital gains. Now, the key word here is proposed. It's not a bill yet, it's simply a proposed plan. But this will impact you whether you are a home buyer or a homeowner, so I want you to listen up. The approach that I'm going to take today is literally neutral, right down the middle. What you're finding in the media and on social media right now is, depending on whatever news resource or news outlet, their political take, they're adding a twist to it. I'm just going to give you the facts because, I mean, let's just be honest. This will, if it's passed into a bill, this will impact me as a taxpayer, but me as a professional, since I'm a mortgage professional and actually help people finance homes. So it's super important information. I'll give you the facts here in a minute, but before I do that, I want to give you a market recap over the last week. And I want you to bear with me for about 30 seconds because this is super important too in regards to where rates are heading into 2018. Excuse me. So last week I talked about mortgage interest rates hitting 2017 highs. We were riding a trend where rates were improving and it was getting kind of ugly. And what I had mentioned was, depending on what happens this week will determine the direction in which mortgage rates will head into 2018. The good news is mortgage interest rates this last week rebounded. They improved to very nice levels, better levels from before they worsened. So that's really good news. The market's not ready for higher interest rates, so I'll keep you posted in regards to what happens there. But 30-year fixed rates, depending on your down payment, your credit score, and type of property purchased, they're still in the upper threes. Still a great time to refinance a home. Still a great time to purchase a house. So I want you to reach out to me if you have any questions. I would love to get you some information, give you your options surrounding whether you are looking to refinance or purchase. All right, so let's talk about this proposed tax plan. There's two parts of it that I want you to focus on. The media right now is eating up the mortgage interest deduction part of it. I think they're missing the mark. I think they're focusing on the least relevant of the two. But let me talk about that one first, and then we'll get into capital gains. Right now, under IRS tax code, you can deduct mortgage interest up to $1 million of mortgage indebtedness. Meaning, if you bought $1 million home and you have an $800,000 mortgage on that home, you can deduct the mortgage interest paid on that $800,000 home loan. Under the proposed tax plan, you will only be able to deduct up to $500,000 of that $800,000 mortgage interest on that home loan. So, big picture kind of sounds like a big deal. Reality, when you actually pencil out the difference, it's not that big of a deal. My wife and I bought a home this last year, and I can tell you that mortgage interest deductions never crossed our mind in regards to our final decision to purchase this house. So, do I think it's a big deal? No. Do I think it will impact the housing market like the media says it's going to? No. It's not going to cause a bubble. It's not going to cause a slowdown. We're going to be just fine there. Now, I think the part of this bill that I need you to pay close attention to is the capital gains portion. So capital gains is the tax that you pay on the profit of a sale of a home if you had not lived in that home 2 out of the last 5 years. So under the current tax code, if you lived in your house 2 out of the last 5 years and you sold your house and you made a profit, you pay 0 taxes on that profit up to $1 million if you're a married couple, if you're a married household. Under the proposed tax plan, you will be required to live in that house 5 out of the last 8 years to receive a capital gains exemption. Kind of a big deal. So they're going to want to see you staying in your house a little bit longer to qualify under that capital gains umbrella. If you have any questions on this information, please let me know. This is relevant, it's real, it's factual. You can't always believe what you see online. So if you found this information valuable, please share it. If you have friends or family members or coworkers that have any questions, I would love to be a resource. I'm out of here. Have a great weekend, and I look forward to connecting with you next weekend as well. Bye for now.